Hello and welcome back to Financial Flagship. My name is Alex and I hope all of you had a great trading week so far. In this video we're going to go through all the analysis for the upcoming week on the Forex and commodity market. Also, keep watching till the end as you may be interested in the latest cryptocurrency news and trends. Now let's start off with EURUSD. In our previous analysis, we correctly forecasted that EURUSD will start a bearish move. The trigger was the news coming out from the FOMC meeting, in which officials held interest rates near zero, but signaled that they expect 2 increases by the end of 2023, pulling forward the date of liftoff as the economy recovers. This news event heavily impacted all the major currencies as the dollar index gained a lot of strength. For this week, for EURUSD, we expect the price to correct the previous bearish impulse. After that, in the coming weeks, we expect the price to break the $1.17 low. Moving on to Pound USD. Last week, we correctly forecasted the British pound to start a bearish move, with the FOMC news event acting as a bearish trigger. For this week, we incline towards a counter-trend move that will act as a much-needed consolidation for the downtrend. Afterwards, we will expect the price to reach the $1.36 level. For dollar yen, in our previous outlook, we expected the pair to drop towards the support area. Instead, the price gathered some bullish momentum and slowed down the small rally. For next week, we expect the pair to reach the support level and bounce back up. Let's hop on to Aussie USD. Last week, our forecast came true as the Australian dollar dropped and broke the support area. In the coming week, we expect the price to continue to make a pullback and reach the resistance area before falling again. Let's move on to USDCAD. As we were expecting in our previous analysis, the US dollar broke out of the channel and gained even more bullish momentum compared to the Canadian dollar. For this week, we expect the price to make a pullback towards the support and range for a while before resuming the bullish trend. Guys, if you ever want to track our weekly analysis, head over to our website, choose the market that you're interested in, from Forex, commodities, stock market, crypto, and select the analysis week that you prefer. After that, just by clicking this button here, you can verify how our analysis is performing for every pair that we are researching. This will take you to our TradingView profile, where every analysis is recorded in real time. Also, if you're interested in educational materials, follow us on TradingView and stay up to date with the latest technical and fundamental trends. Okay, now let's head back to our charts and see how did gold perform last week. In our previous forecast, we correctly anticipated gold to make a pullback and continue the bearish move. Our forecast for this week is that the bearish momentum in gold will increase, but not before the price will pull back towards the resistance area highlighted on the chart. After the correction is completed, we will expect the price to continue to depreciate in the coming weeks, having a great chance to break the $1,675 low. Moving on to silver. Our previous forecast for silver came true as we anticipated the drop that took place last week. As it stands, in the coming days we expect the price to pull back towards the resistance area and continue to drop towards the support level. There is a possibility for the bearish momentum to increase even more and head towards the $23 level, but that won't affect the bigger structure as we find ourselves in the big weekly uptrend. Now let's have a look at US oil. Last week, US crude oil dropped from the rising wedge pattern line without any big impact. We would expect the price to fall from here into a corrective phase and test the first support level, but this might happen after we break the top once more. Moving on to natural gas. In our last forecast, we correctly anticipated natural gas to start a pullback in order to correct the previous bullish impulse. In the coming week, we foresee the price to hit the support level, and at that point we'll monitor the price action to decide whether it will continue to drop or give signs of reversal. Let's head over to copper. Last week, copper started a bullish rally that stopped around the support level. In the coming days, we are expecting a pullback to occur and drive the price towards the resistance zone highlighted on the chart. Now let's head over to the crypto market and start off with Bitcoin. Paraguay's Deputy of the Nation has confirmed that new legislation in regards to Bitcoin will arrive in July. This comes amid growing adoption in Latin America led by El Salvador, which could be followed by Panama as well. With Bitcoin mining concentrations increasing in North America, Miami Mayor Francis Suarez wants to make his city a crypto mining hotspot. Mayor Suarez told CNBC on Thursday that he has invited global mining firms to explore setting up data centers in the area. According to Suarez, Miami's abundant nuclear electricity supply could entice Bitcoin miners wanting to switch to clean energy sources for their operations, particularly given the current focus on crypto mining's alleged carbon impact. Technically, Bitcoin is still moving in the range created by the resistance and support areas. In the short term, any move up or down is a 50-50 in our opinion. Once the price reaches a certain area of support and resistance, then we must study the structure and decide if it's going to break the range or continue to trade inside. Let's move on to XRP. It appears like there isn't a day that goes by without a big development in the ongoing lawsuit between Ripple Labs and the Securities and Exchange Commission. In the most recent such development, the court has granted Ripple's request for assistance in obtaining XRP data from a list of offshore cryptocurrency exchanges. This means another fighting chance for the company to prove that the United States Securities and Exchange Commission lacks jurisdiction over the sales of XRP which majorly took place in other countries. From a technical perspective, as we find ourselves in a downtrend created by the big bearish moves that took place in April and May, we think that XRP has a higher probability of a bearish continuation. However, because the price is in a consolidation right now, a break of the red trend line and a test of the resistance is not out of the picture. We advise caution. Let's move on to Ethereum. Privacy is a top concern for decentralized finance and general cryptocurrency users. The commonly held belief of anonymity formerly drove many to use currencies like Bitcoin and Ethereum, but this is quickly fading as more surveillance comes to light. For this reason, earlier this year, the Right to Privacy Foundation sponsored a new DeFi project called Railgun. Railgun, a privacy system built directly on Ethereum, allows users to engage in cryptocurrency and DeFi-based activities, ensuring financial freedom without the fear of being spied on by anyone. Technically, Ethereum is trading in a range like the other big market cap cryptocurrencies. We think there is a higher probability of a continuation towards the downside to reach at least the support area marked on the chart. However, a retest of the resistance is always in play because of the range trading dynamics that the price structure is making. We would advise caution when trading this pair for now. Let's hop on to Litecoin. For the fourth time this year, the federal auctioning site will auction off another lot of Bitcoin and for the first time Litecoin. In other news, after inking a sponsorship agreement with crypto investment app Voyager, NASCAR driver Landon Cassill will be paid entirely in cryptocurrency, a first for the renowned auto racing corporation. His payout will be mainly comprised of Bitcoin and Litecoin. Technically, if we see Litecoin break the orange trend line marked on the chart and consolidating above, we can infer that the price will reach the resistance area or the previous top in the structure at $208. A bearish continuation is always in play because of the big down move that happened in May. Our coin of the week is AAVE. AAVE is a decentralized financial protocol that enables users to lend and borrow cryptocurrency. Lenders earn interest by depositing digital assets into specially created liquidity pools, while borrowers can then use their crypto as collateral to take out a flash loan using this liquidity. When it has debuted in November 2017, AAVE, which means ghost in Finnish, was known as Etherland. However, it was rebranded to AAVE in September 2018. AAVE acts as a governance token, allowing owners a say in the protocol's future development. It also offers holders with lower platform costs. Technically, AAVE follows the same price structure as the bigger market capitalization cryptocurrencies. We had a top in May at the price of 669 USDT per AAVE, followed by a crash that created a low at 223 USDT. From the 23rd of May, the day of the low, we are in a consolidation, with the price moving between a resistance and a support area. The higher probability move right now is a bullish spike that will reach the resistance area with or without touching the support before going back up. And that should be all for this week. If you guys found this video helpful, we will be grateful if you hit that like button below, share it with your friends, and subscribe to our channel. See all of you next Saturday. I wish all of you a profitable trading week, and until then, trade with care and thanks for watching.